No one wishes to go through life wondering how they can scrape up enough money to get by, right?
Saving money is a simple and reasonable action that will allow you to prepare for all of the possible outcomes in your life.
The best way to save your money is to create a savings account.
Some of the most common types are traditional money market, certificate deposit, and specialty.
One of the most important saving accounts is an emergency funds saving account.
A traditional savings account is designed for someone who needs to save money for either short or long term while not being concerned about getting the best interest rate. They are found at traditional banks or credit unions and allow you to earn interest on your money, although they pay lower interest rates compared to other types of accounts. At most banks and credit unions, you are able to open a savings account with a low minimum deposit. Typically, you are allowed to make 6 withdrawals per month before receiving a penalty. Banks and credit unions may allow you to manage your account online using mobile banking, by phone, or at a branch. In the event of a bank failure, if your account is insured by FDIC, your deposits are insured for up to $250,000 per depositor per account ownership category. The NCUA also provides similar insurance for federally chartered and most state-chartered credit unions. A money market savings account is a perfect match for someone who wishes to earn interest on savings while having more options for accessing their money. They combine features of a regular savings account with those of a checking account. These MMSAs can be found at brick-and-mortar banks as well as online banks. The rates are typically better than regular savings accounts. You are able to write checks from your account or access funds with an ATM or debit card. If you make more than 6 withdrawals per month, the bank can charge a fee. Going over the monthly limit could trigger a fee or result in the banks closing your account if it happens frequently.
Certificate of Deposits savings account is ideal for someone who wants to earn competitive rates and won't need to access their savings right away. In these accounts, you agree to leave your money within a set period of time. Throughout that time, your money earns interest, and when the CD matures, you can withdraw your savings or transfer it to a new CD. This type of account can be found in traditional and online banks. However, online banks tend to offer better interest rates. Certificate of deposit terms typically range from 30 days to 60 months, with longer terms usually leading to higher rates. CDs are best for money you know you won't need immediately because banks can charge an early withdrawal penalty if you withdraw your savings before the maturity date.
A specialty savings account is best fit for someone who wants accounts designed for specific saving goals. Some examples are kids saving accounts, home down payment saving accounts, student saving accounts, health and saving accounts, and many more. These accounts can be found at some banks, credit unions, brokerages, or investment companies. They are ideal if you have singular purpose for the money you save.
Throughout your lifetime, you will find yourself running into unexpected issues. You may lose your job or have a higher cost of monthly bills. Although most situations are unavoidable, there are ways to be prepared for them. The best way to prepare is to set up an emergency funds account. The goal of this account is that it should allow you to live stably for a few months if something unpredictable were to happen. It can be interpreted as a copycat insurance policy. The only difference is that instead of paying premiums to an insurance company, you're setting aside money for yourself that can be used at a later date. That money can be used for any significant expenses that arises. Making a personal checklist is the best way to confirm that the money remains in the account and is not spent. The checklist should show the acceptable expenses with the money that was set aside for. They should also be true emergencies, not vacations or shopping sprees. An emergency funds account is the best way to prevent yourself from having to add up your debt in time of need.